Now for a quick disclaimer. Nothing you see or hear on the flight deck is investment advice. Nothing said today is intended as investment advice. Those participating in today's discussion may have bought, held and/or sold the stocks discussed today prior to today's discussion and/or may do so afterwards. Remember, you are responsible for your own investment decisions, and if in doubt, you should seek advice from an independent financial advisor. Stocks can be high risk, and you may lose the entire amount you have invested. Please now sit back and enjoy the flight.
Hello, and welcome. This is the 5th episode of The Flight Deck. Today is Tuesday, the 10th of December. We have a discovery at the Megrez #1 well, and the Flight Deck crew are joining me. We're all excited to get into the meat of this and what it means, and we're going to try and unpack it a little bit today. We've got an oil column which proves that there's a trap and a seal in place of over 1,200 feet, which is close to the height of the Empire State Building, which in a conventional reservoir is nothing short of spectacular. So we will look at that, and we will look at some of the remaining risks. So first of all, Sporozine's with me. What did you think about the news today?
I mean, Flight, great to be here. I was delighted with the news today to see Top Set 1 come in, Top Set 3 come in, and this bonus shallow zone. Obviously, there's still some way to go before the company has done all their analysis and determined the go forward plan in terms of how to test. But I'm just so encouraged by the news that came out today. Probably exceeded my expectations, quite honestly. I appreciate this was a relatively high chance of success, but to get to TD on the well and come out with these results is really fantastic. And as I said, very encouraging for the next stages of the program.
Yeah, it really was. Yeah, beyond my expectations. The company guided it was a very high chance of success, and the remaining thing to prove, as we've talked about on previous episodes, was whether there was an effective trap or seal, and that is categorically the case. You cannot have an oil column of this nature without an effective trap or seal. Waiting to see the results of the flow test. It's now a question of physics, where sections of that pay at porosities over 20%. And the permeabilities we don't know yet, but they will be relative. So the company's guided anything between 5 and 35 millidarcy. And so we should be within that range. And if that's the case, where there's substantial hydrocarbon accumulation in a conventional reservoir, then we should be expecting some significant flow rates. To put that in context, I think Prudhoe Bay is less than 500 foot of pay, and we have an oil column here at over twice that in conventional reservoir. So I'm just unbelievably excited about the potential. As you say, we were targeting just three of the top sets. 2 came in as guided. The third one in this location wasn't looking well developed. That's not to say it's not well developed further east, and obviously there's still the other top sets to go for. The company guided for 600 million barrels from this, and we should be seeing that prospective guidance of resource move now to contingent resource status, which is again really significant. So yeah, just delighted. So you woke up this morning, you read the news. What happened to you in your household this morning?
Well, actually, I've got quite a young daughter who's wakes up pretty early sometimes. So she was with me in my office when I started reading the news, and I was jumping about my office quite honestly. And I don't think she really could understand, obviously, why that was. But I was really pleased. I think, look, one of the things I think we've all been looking out for here really is whether or not the analysis pre-spud of what we were going to find below ground, particularly the porosity. So that to me was one of the most important things that I was looking for out of this well. Were we going to find something from a porosity and a permeability standpoint that would allow us to really flow this thing commercially? I appreciate historically there's maybe been some doubt about our ability to flow some of the tighter reservoirs commercially. But here we found significant portions of the reservoir have shown in excess of 20% porosity. So to me, that really does validate all of the analysis work that had been done by the company and by eSize, pre-spud. And that is one of the things that I think fills me with a good deal of confidence that we'll be flowing this in our production test at rates that will just demonstrate unequivocally this thing is commercial, and I think there's potentially more to come from this Eastern Topset. So I sort of I don't at this point I appreciate the company will now take a little bit of time to design the right test. I'm absolutely prepared to be a little bit patient as we head into the holiday period. I don't really have huge expectations that we'll see much updates from the company over the course of the next 4 to 6 weeks. But when we come back in January, I'm looking forward to sometime in January seeing an update from the company on some of the analysis that's been done, the plan to test this well, and I think that's just a short period of time. But I'm very encouraged so far from what we've been told by the company this morning.
Yeah, and I think it de-risks the gas piece, which Pantheon signed the gas precedent agreement with the AGDC to supply gas for the phase one pipeline. And I think there was an element about how much gas Pantheon could supply, and obviously with the discovery again here, there'll be a gas oil ratio, and there'll be further associated gas being able to produce, which supports the phase one project again. So I'm sure that the AGC we're looking at this very keenly. So
I would just say from an investor point of view, hats off to the company for really getting to target depth on the well without any incident whatsoever. So obviously Bob and Tony and the rest of the team have done a great job so far with the Megrez well, and obviously fingers crossed we look forward to a trouble-free remainder of the program.
And now I'm just going to turn that over to Alaska Geo-Phys to give us really just the headlines of what he thinks the news today shows us, and then perhaps we'll explore that with some questions. So Alaska Geo-Phys, welcome again. Great to have you here from Alaska. What do you think?
Well, I think the RNS is great news. First of all, they've hit light oil. That's a very positive thing. We could have had wet sands. We could have had very gassy sands, which may not have been necessarily bad, but unexpected. The thicknesses are seeing, for example, topset number 1, which looks like they actually hit a little shallower than I predicted or based on their earlier predictions. But they had almost 500 foot of thickness of that. We don't know if it's all going to be over 20% porosity, but it's looks like it's really good. Then they went right into topset number 3, which suggests that they're seeing that based on the log character rather than just one sand goes right into the next sand and they call them different numbers. So there's something interesting there, and again, it's probably based on coursing upward thicknesses they're seeing on the gamma ray and the resistivity log. So they clearly think they've gone into number 3, but at the same depth as the base of number 1. Now their topset number 9, they said, was sort of marginally developed. That would have been a hint that there is something there, but again, it's probably going to be better developed elsewhere. So all good. Then they found an extra bonus sand up in the Prince Creek, which, without actually seeing the log, is probably what we would call the Ugnu on the north slope at Capark. And Prudhoe, that's a heavy oil deposit, but they're describing it as light oil. So it's, again, very interesting news, and it even gets better porosity and permeability up there.
Well, we're going to move on in terms of just thinking about some of the risks now associated with the flow test. And we've got Mr. Darkon on the line, and he's got a few questions. He's known for asking a few questions.
He certainly is.
And we'll just let him take it away with Alaska Geo-Phys. Great to have you with us, Darkon.
Right. I have a legal background. I've over 20 years experience in corporate finance. I spent the last 9 years before leaving the PE firm that I was at, working as a head of legal for a private equity firm in what most would consider a high risk jurisdiction. I came across Pantheon when they listed, and I decided to invest for the Alkaid and Winx drills. And so also attending the Alaska presentation, which was quite interesting because everyone at that presentation seemed to me to be focused on the Texas debacle. And I felt that I was a relatively new investor and interested in the Alaskan story. I started bombarding the company with questions, came across in January, met up in person again with Justin Hondras, said I'd be sending more questions. And then when they started doing their webinars, I continued doing that, and I thought I'd start tapping the resource which is available in terms of the whole shareholder base, and started sort of collating the questions in my spare time to send to the company. And that sort of worked a treat because my legal background, I've got lots and lots of gaps in my knowledge. So being able to get questions from the likes of Alaska GeoFirs and others was hugely helpful to my own investment analysis of the Pantheon story. Yeah, so I have a few questions because I like to ask questions, as many of you know. So there was no mention of gas in the RNS. So Osborne mentioned obviously AGDC being happy about, they need gas, but we only have light oil mentioned in the RNS. Why would that be?
I think when they say light oil, they're going to have a GOR that's going to be anywhere from 800 scuffs per barrel of oil to maybe 5,000 scuffs per barrel of oil. So again, it's kind of what we've been finding in the rest of the North Slope and possibly even a little bit gassier. But until we get some production test or a MDT, a modular dynamic tester from a sidewall probe, we really won't know what the actual gas composition is. But they also have the mud logs, which again they can use. Pixlr plot. It basically shows that whether it's kind of a dry gas, light oil with gas, just a regular oil with limited gas. They can tell a lot of stuff from the mud gases. So again, I think we're still in the question we don't know yet, but again, I think it's still optimistic.
I mean, could it also have something to do with the type of drilling mud that they've been using? So it being oil-based rather than water-based? I think from someone called Maris, who is a professional, retired driller. I think he was saying that the gas would have been dissolved in the oil-based mud to some extent. So maybe that's why not. I mean, do you agree with that? Or
Yeah, Geodis Rock on the flight server had a good analysis of that. There's different types of oil-based mud, so I don't know exactly what they're using. But for mud gases, they're using the carbon 1 to carbon 5 signature. And again, it's the stuff that would be contained within methane, but dissolved, a little heavier components. The mud gas wouldn't actually see that signature if they use a synthetic oil-based mud, which are actually heavier carbon components. So again, I think we're okay as far as the mud signature, really talking about the reservoir quality and makeup rather than the mud gas being from the mud itself.
So just unbelievable, Jeff, here again. Welcome.
Thanks a lot, Flight. Yeah, I've got a couple of questions for Alaska GeoFirs as well. One question: the company was able to extract a 60-foot core from topset number 3, but was unable to extract a core from topset number 1. What would you read into that from an engineering standpoint? Question number 1, and question number 2: to what extent is the lack of that information from topset number 1 going to inhibit any discussions that we have with partners, financiers, because we don't have that data? And the final question is, if we flow that zone, would we then get the type of data that we might be missing from not having the core in topset number 1?
Okay, I guess first thing I have to probably reread the RNS a little bit better. But it is a little strange that, again, they seem to have come in a little structurally higher than they anticipated. So maybe they weren't quite ready to core at the measured depth they came in at. But when they did decide to core, they actually cored the bottom part of the zone 3, topset number 3. And again, that's probably going to be more marginal porosity permeability down there than if they'd hit the top of the topset number 3. And certainly topset number 1 would have been the choice thing to have gotten. I don't know why they didn't. But as you raised the question, I think flow rates will address all of that. They also took 50 sidewall cores, and anything they didn't do a whole core in, they have the possibility of going back up there. And I'm sure topset number 1 has been plugged with a lot of sidewall cores, and those are going to tell a lot about porosity, permeability, water saturation, pore throat size, all the stuff that you want to know in order to predict where you want to do a production test.
So in your view, it's not really a big miss?
No, not really. Again, that's I don't know enough about how they operationally did their well, so I'm just speculating. But again, the sidewall cores, if they took some up there, is going to definitely fill in any gap they got from missing a whole core.
Sorry, can I just take a step back to the very beginning of the RNS? Companies discovered a 1,260-foot interval, which is about the size of the Empire State Building. How does that compare to other discoveries on the North Slope? How many Empire State Building size intervals, vertical intervals, are there? How common is it to discover something this size?
Well, let's step back. 1,200 foot will not necessarily always mean net pay. So again, we'll have to go back to the log analysis that eSize and the VAS analysis will do. But if you look at Prudhoe, which is the largest conventional oil field in the U.S., the thickness of the oil leg is 475 foot at the max. So again, to find 1,200 foot, assuming that was a complete sand-filled trap, that's huge. Now, to put that also in perspective, at Talitha, they had 3,700 foot based on VAS, the volatile analysis systems work. But again, that's kind of tighter rock. It's right next to the source interval. So again, pretty much everything is charged with hydrocarbons up to the point where it reaches buoyancy, and then we go into more of a conventional trap. So it's an amazing find. And again, if I was a company like Hillcorp, ConocoPhillips, or anyone else on the slope, or even someone off the slope, I'd be seriously looking at this as something I'd want to get into.
So when we have something like top set number one being almost 500 foot, then that's pretty serious. That's comparable to the size of the intervals or horizons at Prudhoe Bay, or am I overstating things?
Yes, and again, 475 foot versus 500 foot. Now, what I can also say is the Pica discovery by Armstrong Oil Search and now Santos. If you look at their oil pressure plots, you can see that they have about a 600 plus foot oil column there. Again, it all won't be in the best sand, but basically they've used pressure and a hydrostatic pressure gradient to basically plot how thick that oil column is, and it's over 600 foot. So again, we're probably even better than that. But we have an aggregational system of deltas here. So rather than top sets being sort of, one after the other at about the same datum level when sea level was kind of stable, our sea level here was probably rising. And basically, we were able to stack more sands on top of each other with deltas that just didn't fill the basin. They just kind of stacked on top of each other.
A question of Alaska GeoPhys. They've got the rig there on standby, I think, on the pad. And what does that point to in terms of potential forward program from your point of view?
The rig being stacked at the Megrez location, I think is very good. It's going to save some time for getting the well on production whenever they want to test it. They may bring out a short exploration well test kit to basically kick it off, but then eventually I think they'll want to perhaps even bring their facilities from the Alkaid number 2 pad down here to do a longer term test. And again, they're going to get good gas oil information. They'll try to get some pressure, volume, temperature, or phase information when they kick off the well and actually look at the formation fluids. So it's all good, and it's going to probably happen quicker than you would think if they get the data back from their core and other analysis to know where they want to kick off their test.
Yeah, how fast would it be, do you think, to do the analysis? I mean, there's a lot of data gathered, right? And so it's not days; we're looking at weeks. And I mean, my thoughts are the earliest they could look at flow testing would probably be February.
I think that's consistent with what they're planning. Again, from the whole core, if they didn't get the best whole core, they'll be going after the sidewall core analysis. And again, some of the stuff like porosity permeability will turn around pretty quickly. Others will take a little bit longer. They did go to 5.5-inch liner, which was a little smaller than I would have thought. But again, I didn't see the original wellbore plan, so maybe they started with a smaller surface casing than I would have thought.
Another question for Alaska GeoPhys. Were you surprised about the Prince Creek formation find? It's sitting above top set 1, and it's right above top set 1. I'm very interested in your comment about whether this is a continuous zone or just a approximate contiguous zone.
Well, the UGNU formation, again, this is just speculation. I'll have to hear more to understand it. But it can actually be kind of anywhere from, instead of marine sedimentation, it can actually be alluvial, non-marine sediments, rivers, alluvial deltas going into the coastal areas. So it's potentially even better porosity permeability. Again, the charge getting up that far, that's quite interesting, especially if it's a light oil. And the fact is, they're not saying it's heavy oil at this point, suggests that it hasn't been so close to the surface where the oil's biodegraded to lose a lot of its gas components. So I think it's interesting, but again, we don't know enough, but that is a very thick interval they're talking about. It's not like a 30-foot sand they just spuriously found, as I think you said, like 500-foot potential thickness. If you listen to Bob Rosenthal in one of the webinars, he's saying that these avio anomalies are typically going to be about 75 foot to 125 foot sand thickness intervals. So again, having topset number one being 500 foot, again, we don't know if that's all great sand or just sand. I don't mind missing topset number 9 too much. We know there's 9 mapped intervals, and we've only gone for 3 of them. So there's a number of these that we couldn't penetrate with this particular well, and those are still all viable. Yugnu or the Prince Creek Formation up hole, that's more than going to make up for the volume. And if you remember my numbers I did looking at the areas that they published in the webinar, topset number 1 was like 65% of the area for those 3 anomalies, and the others are just, kind of 15%, and I don't know, whatever the other one might be, like 30% area.
Absolutely.
So number 1 was the moneymaker here based on their pre-drill analysis, and the other 2 were kind of just, there to add some value, but not necessarily as big.
They said that they're going to use, or they have, a 5.5-inch production casing in anticipation of long-term testing. Does that give us any indication? I mean, is that thicker, narrower, or thick, or wider than typical production casing? Does that give an indication of the type of flow we'll see, or is that not information that's important?
Well, the casing is really to protect the formation, and again, the cement goes up it. The state will require cement to go so many feet above the highest known oil accumulation. So now they'll have to have good cement all the way up past this Prince Creek interval. So they'll have to maybe do multi-stage cement jobs to make sure they have good cementing. But the 5.5-inch casing is then going to have a liner, like a 2 7/8 inch liner was used at Alkaid number 2, and it also had a 5.5-inch monobore from surface run for its casing all the way down to the horizontal part of the well. So the 5.5-inch and the 2 7/8 inch liner are going to be the things to worry about. Let's say you have to pull the stuff and do work, the cleanouts and stuff. The 2 7/8 inch liner didn't have a lot of room for coil to go down there and do its work, so you had to pull that out sometimes to do those cleanouts of sand.
In terms of the volume that passes through that size casing, I mean, is it going to limit the volume that we see in terms of the long-term production flow tests? So if you're going to have a big pipe, then you're going to have more oil potentially flowing through it. If it's a smaller pipe, then it's less, right? So all I'm trying to get at is, does this mean if it's 5.5 inches rather than say 10 inches or 12 inches or 2 inches, how does that impact the type of flow we're going to see when they go into the long-term production test? So are we going to see 100? That's sort of what I'm trying to understand.
Yeah, let me set you straight a little bit. It's not the casing size that's really going to determine production rate. The tubing that's placed down there would be like 2 7/8 or 3.5 inch. So the oil actually comes up through the tubing, and then the annulus between the tubing and the casing is either used for like maybe perhaps future gas lift, but it's the tubing itself is going to be the rate constrictor if it is constricting. But again, they won't run that till they have a workover rig, or again, they bring out the neighbor's 105 rig to run the tubing and then set it up for full production long-term test.
Do you know what kind of plate capacity they might be looking at in terms of a production flow test?
Without seeing the logs, my guess is something in the range of 2,000 barrels of oil per day, possibly higher. And again, it depends on if they stimulate it with a fracture or they go unstimulated, but with 20% porosity or better, they may not need to do a stimulation right away just to get a good rate.
Okay.
Would the size of the column, Alaska, negate any possible lateral in the well test? I mean, there was talk at one point of perhaps doing a lateral, but the 490 foot. I think that was about the size of the lateral they were talking at one point. So
Yeah, that's where the casing becomes more important. If you're going to do a lateral out of the 5.5 inch casing, that's going to be a little limiting. Now, if you came out of a 7 or 7.5 inch casing, you have a lot more room for a bit size to actually do a horizontal well. Just my opinion. But again, I don't think they'll
Ala-
necessarily need a horizontal to get some pretty good rates to at least give investors and future partners a good feel.
They mention sort of some strange terms to me. I mean, they talk about Maastrichtian age and another age somewhere. Are these all Brookian horizons, or are
Yes,
these
they are
different?
all Brookian. Yeah, they're all
Despite the
Brookian.
okay,
Someone makes up these funny names for different geologic ages. I can never remember them all, and I wouldn't want to.
okay, but yeah. So as far as we're
so
concerned,
is it
these are Brookian in line with all the other Brookian discoveries on the North Slope, even though they've got funny names.
Yeah. To
Cool.
make it simple, the Ahpun West was a middle Schrader Bluff formation. The K10 or the maximum flooding surface, Decker D, was the one that kind of was the top seal for that reservoir. And then the stuff we found at Megrez is above the K10 maximum flooding surface, Decker D. And again, it would be sort of upper Schrader Bluff to possibly even younger rock.
and these are the same plays, I guess, that Apache and Armstrong are looking for to the northeast. Is that fair to say?
Same type of plays geologically. Theirs might even be younger than ours here.
As we were going into Megrez 1, we were targeting 609 million barrels. And as we look at today's RNS, is there anything in here which points to a potential targeted resource which is lower than or higher than our expectations going into this? Are there any clues here, or do we have to wait for both the February analysis and the flow test? Because obviously this is a very key number.
My personal opinion is going to be above the 609 million barrels based on their thicknesses. But again, until you actually see the well log and what they would, maybe knock out as non-pay intervals within the 500 foot of topset number one, it's a little hard to tell. But again, and then the bonus sand up in the Prince Creek, this tells me it's going to be bigger than the 600 million barrels. Now, the obvious thing they have to tie is also the seismic to these anomalies in the well results to see again if it confirms the aerial extent they originally thought, or is the aerial extent look now bigger or less than they thought. So it's a question of oil in place calculations.
Should we be attaching any significance to the fact that they are talking of immediately moving to long-term testing of these horizons? Would an alternative course of play been to maybe do a short-term test and then do a long-term test, or is it just that is the data so good then that they've already seen that they are so? Well, they obviously said it that they're going to stretch long-term testing. Could they have been an alternative scenario where? So is this an indication that perhaps things are more positive than maybe the market's anticipating or understanding?
I'll reread the RNS. I'll have to see what they actually said, but they typically, again, would have planned to do a small exploration flowback followed by the longer term test. So if they go to the longer term test, it wouldn't necessarily surprise me.
So there's nothing in the RNS about any exploration flowback having being planned or having been done. It just says in anticipation of long-term testing commencing early 2025.
Yeah, it could also be the question of their RNS was put out and they just kind of skipped over the steps in between.
Okay, so we may still see some short-term tests as a matter of course, as just before they launch into the long-term test, but they're assuming already now, based on the data that they've seen, or the limited data, that they are going to go into long-term testing.
Yeah, and I think the other thing is typically they want to start like at Talitha, the bottom up, so they would have tested the park and moved their way up to the shelf margin delta. Here, if topset number 9 doesn't look all that great, they'll probably start somewhere, topset number 3 to topset number 1, and just focus on that for the moment.
Why would they only have taken one whole core from their drill and the rest being sort of sidewall cores? And is that just because topset 3 was so amazing that they went for a full core there, or would it be something more technical, like they weren't able to get a full core from other horizons, or they didn't try to get a full core from other horizons? What might be the reasoning behind that the thought process for just taking a full core from one horizon?
Knowing Ed Duncan was out on the rig, trying to do the coring stuff, I'm sure he was advocating to do the core. Now, when you start to drill down and all of a sudden you've got some excitement in an unexpected zone up in the Prince Creek, and you go into topset number one, and all of a sudden you've got, some maybe good indications from mud gas and cuttings coming up. Maybe management just said, let's just get after this, drill down, see what we have. Be damned with the core for the moment. Let's get down there and see see what's going to make everyone smile. And then Ed probably says, hey guys, we really would like to get this core. And maybe by the time they got down towards topset 3, that's when they decided to do it. And it could also be logistics. Maybe they just didn't have all the equipment to do it when they needed to do it, since they came in a little depth shallow.
In-flight announcement. Flight's investment server. Sharing industry insights for the good of all. If you'd like to be part of our investor community, and for more information about the topics discussed today, download the Discord app to your phone or computer, then use the invitation link to join, which you can find below.
In our previous episodes, we discussed basically what they were going for. We discussed whether there was an effective seal or a four-way closure. And I think we can categorically put that one to bed. We've released an RNS that shows a discovery, and now we need to set this in the context that the company are moving to flow test, and we await those results in terms of actual deliverability of each horizon and what they might see out of those horizons. All things being equal now we just hand over to physics, right? To the fact that there's a porosity and a permeability to each horizon, and physics wins out. So what could we say are the risks from this point forward? Because I woke up this morning and read the RNS, and honestly, it was more than I could have hoped for. And I think we're in a position at the moment of looking at the potential of what's been released today in the news and thinking the market is completely offside here.
I think there's also a history. So for example, in 2019, the company had the Winks, well, the West Sac, Uganu Horizons, and the Alkyd Zone of Interest. And ultimately, out of those four, only the Alkyd Zone of Interest sort of delivered. So the perception may be that this has happened before, and obviously there have been follow-on things happened afterwards which also didn't quite deliver. So people may be saying and be thinking, well, yeah, they've made a discovery, a geological discovery, but the company still needs to do more to make before it becomes commercial. And maybe they want to see the company deliver on the actual flow tests before they're willing to go out and buy more. Having said that, I mean, today I personally went and bought more, but obviously that's not a recommendation to anyone else to follow what I do. Everyone should make their own decision on that. But then, yeah, so there's a history element there, and then there's obviously the physics element, as you say, and that obviously the question is then how has the physics changed relative to what the company has tested before? How is the physicality, the geology how is it better at this location relative to what the company has done before? And I think then there may be a room for people to take a much more optimistic look at what the company, at the stage the company is at, and the opportunity here. I think the company has two limbs to what it's currently trying to do. Obviously, we've been saying that they're going to be proving up better quality reservoir, and the RNS today indicates that they're sort of well on the path to doing that. Obviously, the other limb is that they're talking about trying to monetize their gas to fund the business, and obviously you will be able to talk about that. You are able to talk about that more in more detail, Flight.
In terms of the market reaction today, I just want to bring in just unbelievable Jeff. Quick moment on market reaction.
Well, I think there are a couple of forces at work here against each other. Yesterday's ARS RNS talked about the company's liquidity position. I think that there's quite a lot of speculation about how SG&A capital is going to be raised, when it's going to be raised. And I think that has always been something of a waiting anchor to the stock. But the reality is that this company has always been able to raise money for its projects, for its business plan, for its wells. And I really don't think that there is existential risk as it relates to the company's ability to finance itself. Quite the opposite.
Yeah.
So that's one directional force, and then the other directional force is the upward reaction to what were really amazing results today in terms of Megrez. I think you may be right in terms of how the market will wait a little longer to assess the flow rates. But the reality is that certainly the eastern top sets today have proven to have been de-risked. And we're in a completely different paradigm. We have a de-risked reserve or resource that will be upgraded to a reserve, and it is a conventional oil reserve.
Yeah,
Yeah,
100%.
I mean,
What?
Flight, on that one, we almost predicted this in the last call, didn't we? We talked about that there could be a chance that the market wants to see a flow rate, and and they see a bigger jump of risk between the results today and seeing a flow rate now. And correct me here if I'm wrong, but I think what you are saying is you don't see as much a risk as the market does between now and seeing the flow rates basically, and a lot of the things that could have bit us regards perhaps the gas rates, porosity, permeability are already known and ticked off. But please interject if I'm wrong.
I think there's a couple things that are going to happen. One is pretty sure they're going to put some bids down on the leases to the east. Now, whether someone else who goes down there and bids on them, that'll be interesting. The second thing is, as Flight and other folks have said, is largely a principle of physics for the flow rate. Now, there's the weather. You're doing this in the winter, and there's logistics and all that stuff. And you're trying to save money, and you're not trying to spend it all here because now you probably want to follow this well up with an appraisal well. But again, if I saw the logs, which I haven't seen, and I've heard, the porosities are over 20%, which means there's probably pretty good permeabilities to go with those. I'm not shocked that we're going to get some high rates, and it doesn't keep me up at night worrying about, the production test.
And I mean, I think you already touched on this, but I'll just ask it again and expressly. So the RNS talks about porosities above 20%. Now, obviously, that's significant in terms of potential flow rates. They don't mention high permeabilities. Is that just because they haven't yet analyzed the various cores and sidewall cores to be able to say exactly how large the permeabilities are? And secondly, you've already mentioned, I think, that if you've got high porosity, you're likely to have high permeability. But is there a situation where you could have a high porosity and a low permeability, or would that be incredibly unusual?
The permeability measurements are really going to come in through the core and again through possibly flow testing. But they typically, you wouldn't find a whole lot of cases of big porosities and tight permeabilities unless there's a lot of cementation or something kind of weird occurring in the pore throats. If it's a carbonate, then that's completely different. But for sandstones, I would expect a pretty good relationship between porosity being good and permeability being good.
And that's based on just generally, or the North Slope, or is just, again, there's geology everywhere?
Worldwide.
Okay.
And from the well logs, I'll have a pretty good feeling for, does it look like these things are coursing upward? Do they look like they're coursing downward? They'll then decide, this looks like a channel feeding the delta. This looks like the delta prograding. They'll turn out, and from the well logs alone, they'll know a lot of information about where the better sands are and perhaps how these sands are going to change in some distance away from the well bore. It could even get better away from the well bore based on what they see in the logs.
Another question on, they mentioned that the third and deepest topset is not well developed in this location. Again, they say specifically in this location, which to me it sounds as if does that imply that it could be good at another location? What are your thoughts on that?
Yes, it's hard to tell. Hopefully they have a webinar and show us some logs and analysis. The other thing is these other 6 targets they didn't see in the well. They may have seen clues as they were drilling through some of the shales that certain of these unnamed top sets that were not in the original pre-drill are going to come in looking better. So they'll get all types of clues. They'll be detectives. And from what they didn't find in this well, they'll know better about what they could find if they stepped out a mile, 2 miles, 3 miles.
Would providers of finance wait until the actual flow test to make a decision on providing finance? Or might they take a view based on, say, data that is available to them in a confidential data room that is not yet released to the market? So the idea, what I'm trying to get at is what scope is there for a deal to potentially be reached before and to surprise the market before flow testing?
I think there's a couple answers to that question. One is if they did a flow test, you can change your resource to reserves category, at least over a small area, like at Alcade number 2. But I think the bigger question is if they did a data room and there's a lot of people maybe seeing these results and saying, wow, I'd really like to look at this in more detail. I think, you have the chance of people wanting to do a farm out, farm in, be an investor, buy more stock, whatever. That, if this is as good as it looks, it's like an alpine field just being discovered, and you don't find too many of those.
Yeah, and you don't get too many of those. Bob Rosenthal, Technical Director of Pantheon Resources, said, this is an excellent result, justifying our assessment of both the geological chances of success and the likelihood of encountering commercially viable resources. We are now evaluating the extensive data gathered in the well, which will take some time, but will provide us with maximum information to design well testing. Tony Beelman and the team have done a great job in delivering this well on time and budget, including gathering a full suite of wireline logs and a whole core. It's early days in the evaluation of the well results. The full significance of these results will become clearer once the data are analysed and after production testing, expected during Q1 2025. Bring it on. So today, the Friday the 13th, we had the board meeting for the AGDC, some interesting information, but we'll just touch on the previous announcement that the Alaska Gasline Development Corporation put out about ADA. Now, ADA, they had a resolution supporting the development of Alaska LNG Phase 1, the in-state pipeline portion of Alaska LNG, that's designed to bring North Slope natural gas to interior and south central Alaska. So ADA is the Alaska Industrial Development and Export Authority, and they've approved a resolution on Thursday, the 5th of December, to negotiate a letter of credit for up to $50 million, which will form the backstop agreement between the AGDC and a pipeline company who will complete the front-end engineering design portion of the work. And that really is quite a significant move, simply because it allows the project to move to a final investment decision. So can we just touch on that, Sporzine? So we had that backstop agreement. I've just outlined the basis of it, but do you see that as significant?
Flight 100%. It's been a really material news item for us. I think those that have followed the Gasline story for the last few months will be aware that Frank Richards, who's the president of the AGDC, really made a commitment in April this year at the time when the funding for the next 12 months was being negotiated. Frank made a commitment to secure FEED funding for at least the Phase 1 Alaska LNG project, and he made a commitment to secure that funding before the end of the year. So we've been expecting some news around the FEED funding, which has effectively been the thing that's got in the way of the project progressing to the next stage. And I think it's material that we've seen AIDEA effectively provide or agree to provide a letter of credit to backstop that funding. So in the event that the pipeline doesn't move to final investment decision by the end of 2026, which is the current pipeline, the current timeline that they expect FID to occur, then the company that conducts the FEED activities will have their costs covered. But I think it's a really significant milestone, and we expect now for FEED to start early in the new year.
Now today we've just listened to the AGDC board meeting where again we got a little bit more colour on this, where Frank Richards was hoping to secure contract with the pipeline company by the end of the year. So that gives them a couple of weeks to get that done, and it'd be great to hear news of that, wouldn't it? Just to round off this year.
I mean, what a week it's been for Pantheon investors. I mean, we had, the Megrez update at the start of the week, which I think was superb and, extremely encouraged for the remainder of the program. We also had a TR1 from Michael Spencer later on in the week, and I was very encouraged to see him back in the market, and he's got a large percentage of the company as it is, and he was increasing his holding just later after the Megrez result, which is certainly very reassuring from my point of view. And then we've just had the December board meeting for the AGDC, which was, gave a very detailed walkthrough of really all aspects of the LNG project and demonstrated, I think, some significant progress over the course of the year and certainly in recent weeks. So I would say hats off to Frank Richards and the team up in Alaska for some great work this year on the project. We got a recap on the Wood Mackenzie report. I think we've previously talked about the economic benefits to the state of Alaska that report demonstrated, and obviously the significantly lower price of gas in the event of a full LNG project, but certainly for the phase one project, it's clear that the price of gas is likely to be lower than imported LNG. So they spent some time walking through some of the highlights of the Wood Mackenzie report. And then they also talked about some of the key milestones in the short-term plan to effectively get the pipeline built, and they're targeting for FEED to happen over the course of the next 12 to 18 months, and then for financing to be concluded by the end of 2026. Not only do we have the backstop agreement, the sort of, I would say, more what looks to be the administrative process for the FEED backstop agreement to be completed in the very short term, we can also look forward to the lead party negotiations and that piece of the jigsaw to be finalized over the next 1 to 2 months per Frank Richards. And I would just say, I mean, I think it's going to be another significant validation of the viability of the project when a third party effectively will come in and sign a contract to take this project through to FID, and another de-risking event for Pantheon investors. Can I just also add a couple of other things, Flight, that I thought were really encouraging from the AGDC board meeting? One of the things I certainly wasn't aware of was that AGDC had engaged Ryder Scott to do some technical due diligence over the Pantheon acreage, and as you'll see from the presentation, they undertook an assessment of both the original gas in place and also technically recoverable resources across the Ahpun and Kodiak acreage. And by the way, this excludes Megrez at this point, because of course, we still don't know what we've got in Megrez. And Ryder Scott came away with just under 10 TCF of gas at a P50 recovery, so 10 TCF P50 of technically recoverable resources, which actually is more than we have in our own IERs. So I think a significant third-party validation of what we have on our acreage. And I would just say, more sort of slightly philosophically, I think the sentiment across all of the directors in the AGDC board was unequivocally positive. Frank and his team got some tremendous comments from all of the directors, and I think it's really just full steam ahead from everybody in Alaska for this project, it's just very encouraging as an investor in Pantheon to see that level of support coming from everybody up there.
It is, and as you said, the macro position in terms of US energy policy and the politics surrounding this is unequivocally in favour of energy dominance, LNG export, to help secure energy security for Asian allies. It's a case of right place, right time, and we're at the centre of a global infrastructure project. Really, really encouraging. Okay, well, I think we're just going to sign off there. It's been an exciting week. We're going to put all the information in the show notes again, and we'll probably leave you with Frank Richards himself. Take it away, Frank.
To ensure that we have gas to meet the needs of Alaska, we've been engaged with producers on the North Slope. And as I've described previously, we have signed a gas sale precedent agreement with Great Bear Pantheon. They are a new developer that is looking to develop their Ahpun and Kodiak projects, which are approximately 20 miles south of Prudhoe Bay. What they are representing is a source of gas that will cost a maximum of $1 per million BTUs. So significantly lower cost gas. But the value and the benefit of this particular supply is that it doesn't require any gas treatment because the carbon dioxide content of the natural gas is extremely low. Not quite the Cook Inlet standards, but at 0.5%, it's low. It can flow through the pipeline into the utilities. Prospect is directly adjacent to the Dalton Highway. It's directly adjacent to the Trans-Alaska Pipeline, and it's directly adjacent to the Alaska LNG pipeline right away. So it's very well positioned to be able to supply gas into the pipeline, new oil. So for our due diligence, specifically around Great Bear Pantheon, we hired Ryder Scott to do a third-party validation of the Great Bear Pantheon's recoverable gas volumes. So what this represents is, again, Ryder Scott's analysis at the time of the materials that Great Bear Pantheon were able to share with them, including the development plan that had been developed by Schlumberger. So they looked at the opportunity, they looked at the geology, they looked at the technical recoverable resource estimates, and they presented this to us that, yes, there is in place, original gas in place, P50 level, the Ahpun prospect, which is the first prospect that would develop 5.5 billion cubic feet. It's more than enough gas to be able to meet the 200 million standard cubic feet a day that we need within Alaska. That would essentially provide for nearly a century's worth of gas supply just for Alaskans. The recovery factor for Ahpun at 52% is very high. So the technical recoverable resources that they estimate out of the Ahpun prospect at 2.8 billion cubic feet. So that validation, again, was welcomed by us to assure that there is good prospect that if Great Bear Pantheon goes under production, and we hope that they do, that there would be gas to be able to meet the needs of the Phase 1 project. So from their perspective, they're looking for oil play. They have gas associated with it. And that's why they can offer gas to us at a reasonable price of up to $1. Great Bear Pantheon is currently in the testing of their Megrez well that they completed, I think, a couple weeks ago. So we're waiting anxiously to see the results of that and wish them well that it provides for additional resources to what they currently envision they'll be able to produce.
Thank you from all the crew here at the Flight Deck, and hope to see you soon over at Flight's investment server, sharing industry insights for the good of all.